Well, the easing of restrictions on home buying in some places is part of the stimulus measures announced by the Chinese government.
Gary Ng is a senior economist at Natixis, a global asset management company. He spoke to Robin Dwyer about how it could boost the economy and revive the property sector.
Well, I think it's a positive step for the government to actually further to tackle some of the problems that we see in the economy, especially on the property-related household and business confidence. So, of course, it's hard to say whether this is fully enough right now, but at least from what we see from the equity market and generally people's sentiment, things are indeed improving. But, of course, there's still many things that the government can actually do to step up the measures to actually accelerate the process.
And what kind of measures could those be?
Well, I think if you look at the global situation right now, a lot of countries are basically in a rate cut cycle, especially led by the Fed. So basically, it means that the PBOC in China will be able to have a greater room to cut interest rate further. And I do think this is actually quite important to stimulate the demand in terms of the home purchases. And beyond that, some of the other measures that we have seen is really about relaxing the restrictions on how people can purchase the properties, also stepping up the support to build affordable housing to digest, part of the inventories. So I think these are all the measures that can actually support the housing demand in China at this juncture. But of course, how fast is it, or implementation will still be quite important.
What about other issues, including oversupply, for example? We know that's been something that the property market's been experiencing. What can be done to address that?
Now, the majority of the problem will really lie in the Tier 2 and Tier 3 cities, because there has been a lot of apartment or units that are built by private developers that may not be that easy to be sold to the home buyers, or basically household may not be that confident. And with that, I think it makes sense for the government to actually step in to inject capital to turn this housing into maybe the affordable one, to rent it to the low-income residents, or basically it can transform it into other type of models like elderly home. So it seems that the banking sector will need to bear a greater burden. And I think at Natixis we estimate that eventually the cost may be around 2.6% of GDP, which is a heavy cost, but not something unbearable for the government. But of course, there's a cost of a rising debt.
And you mentioned confidence there, and that's key, isn't it? Consumer demand and consumer confidence. There can't be a boost to the property market without those.
Yes, indeed. I mean, the government may be, able to use their own funding to buy those units for affordable housing, etc. But at the end of the day, it's really about whether home buyers will actually, enter the market, which will actually stabilize prices, which can actually create this positive cycle in terms of investment again after the a few years of the regulatory changes. So I think this is really the puzzle that seems to be missing from the big picture here, that may actually drag the process a little bit. So far we have seen progress in terms of the government relaxing more policies in terms of stimulating such demand. But at the end of the day, if China is still in a disinflationary environment, or if disposable income growth is not increasing, then residents may not opt for buying a home at this juncture.